Hello, everybody. Welcome to Friday. As always, I'm looking forward to another session today and being able to talk about what's happening in the markets. I hope everybody has enjoyed a happy holiday season and a good Christmas. Had a good Christmas day yesterday. Um, I guess for here in Canada, I hope you're enjoying your Boxing Day. Um, as always, this is Friday, and that means there are weekly options that are set for expiry today, and we'll be going over some of the trades that we have on deck. There's really only a few uh, to deal with for the next couple of weeks, so we'll be able to get through those pretty quickly. Also, I expect we'll have some time not only to talk about stocks that you may be looking at and uh, uh, going over some of the options and possibilities for some of those if you'd like. But we may have, I expect we'll have some time for any additional questions that you may have. So we'll see how things go, how many people come into the live stream today, um, and we'll go from there. Really quickly, let me just double check something here. um, really quickly, just one note about next week. We are going to be, this is the end of the year. This is the last Friday of December, and that means that next week will be the first Friday of January. However, it's going to be the day after New Year's, so market's going to be open. That means that we're going to go ahead and have this session as normal. And so I'm going to plan to be here. I hope to see everybody else here as well. And as always, feel free, please, to continue to share Rebel Income, the link to this live stream, as well as to Substack, whatever, with your friends, and try to get as many people coming into the community as possible. Okay, with that said, let's go ahead and get things started and talk about the put sale that is set for expiry today. This is on FCX. Now, as we looked at it last week, you could see that the stock had been picking up quite a bit of bullish momentum. Excuse me. And that has continued. Including a little bit of a gap this morning um, for the stock. Oops, there we go. We can see it jumping from about 51 up to about 53 just today. I sold the $44 strike price on this stock, which means that my strike price is all the way down here. Probably safe to say that this option is going to expire worthless. This is also such a long distance away from the stock's current price that if at any point in the last 2 weeks you wanted to, you've had an opportunity to close out this contract early and think about what you wanted to do with the money that you had in reserve for the trade. But just to emphasize the point, let's take a look at the stock and its options right now. And for reference, let's not forget that I brought in 79 cents here on the on the put sale in premium. So we're going to need to expand this quite a bit. Maybe not to 32. Let's try 24. Okay, good. So this is the $44 strike price. And the fact that they're showing 75 cents on the ask right now is really just a function of how far away from the stock from the stock's current price we really are. That means that there's almost certainly not been any activity in the stock, or excuse me, in this contract, I should say, since before Christmas. So this is really not all that surprising. It's been now 3 days, 23rd, 24th, and today, going on 3 days since the last trade for this on this contract. So that means that if you were looking for a way to close this contract today, you probably could, and you wouldn't need to try to pay the 75 cent asking price here. That's frankly a lot of baloney. You could probably put something in for a nickel. There's plenty of open interest here. Probably put in a nickel, a dime, something like that, and wait for the market to come to you, and you'd probably get it. This is an interesting one, though, considering the way that momentum on the upside has really accelerated. Not just, this was starting to show this. This is where it was last week when we had our last live stream, and if anything, it's only accelerated that momentum since then. So the question that kind of comes up at this point is, does this become a stock that is now past the point of trying to do another trade on? Is it rallied past the point of useful value? Or do you think that this would still be worth, if you did want to consider working with FCX, is it worth rolling to a new contract, maybe a little bit higher? You would almost certainly have to go higher in price as well as further out in time. So Barry and Gib, you're the only ones here right now, so I'm going to go ahead and let you give me your opinions on what you think about FCX, and what do you think would be the right move to make, whether you're buying the contract back early, as we like to talk about rolling sometimes, or even if you do what I do, which is to let the option expire, and I'm going to wait till next Tuesday and wait for my capital to become available again. Is FCX worth keeping in the rotation? Barry, you're just letting yours expire, okay? Are you going to look for a new opportunity with FCX, or do you think it's maybe a little bit too extended? What are your thoughts? So I'm with you. I'm letting mine expire as well. I'm very content with letting that happen and not worrying about trying to wait for the market to come to me to get me out. So. Barry, I'll let the price come down a bit before I reconsider. Gib, I would buy at a close or wait, but it's too, yeah. Okay, implied volatility rate is too low to trade, and that's fine. And for me, I'm with Barry. I think the price needs to come down a bit. It's not to say that I'm bearish on FCX, but given the way that the stock's bullish momentum has accelerated, and here I am tracing the 20-day moving average, the slope on this line is really, really difficult to sustain. And so I think that a pullback here at some point, I'm not saying that it's going to, I'm saying that a pullback at some point off of these highs. And as I'm saying this, understand that I was saying the same thing last week, and it kind of paused, kind of sort of a little bit here, and then it just went right back up again. So, I do think that there is a case to be made to see the stock possibly come down all the way into the $49, $48 range, where this previous consolidation was. But it's certainly not a given that it's going to come down that far. I don't know. A lot of that depends on how the market decides it wants to treat what is happening with the stock right now. And right now it is really pushing this and other precious metal stocks up quite a bit. Here's Barrick Mining for example, which is also rallying very, very strongly. So the inflation hedge trade is very, very much in force right now. Okay, so that's FCX, and there goes my proxy for precious metals. I like to use mining companies like Barrick and FCX and some of these others as kind of a proxy for the precious metals and materials themselves. That's really the only put sale that I have on deck for expiry right now, at least until the start of the next year. And so there are two additional put sales here on CTRA, including this week's on target, but both of these are set for expiry on the third week of January. Let's go ahead and check in on CTRA. This is one that I set up on the 17th. So we're really just about 9 days into this trade, and selling the $25 strike price brought in about 40 cents, a little over 1.5% for a 1 month trade. So we're only a little over a week into this one. Let's see how we're sitting on it. All right. The stock had pulled back just a little bit at the end of last week, but it's rallied since then, and now we're starting to approach $26 right now. So obviously we've got 3 weeks to go in time right now. It's not significantly above the strike price that we've sold, and it does have resistance. Let's switch this to a red line. Resistance right here at the 20-day moving average. And this is just a little bit above the stock's current price, probably somewhere around 26, 25. So we'll see if it's able to push above that, or if maybe it begins to define a little bit more of a consolidation range between the 20-day moving average and the blue 200-day moving average line. Either possibility is very real. And I would actually be okay with the consolidation range. That would actually yield probably several different opportunities to work with this stock, either by taking an assignment and then working with covered calls a couple of times, or just by possibly repeating the put selling process. This is already for CTRA. This is a stock that I've used a number of times. I sold out of the stock at the towards the end of November on a covered call, and that was after having been assigned it in October. And so this is one that I've just kind of kept in the rotation, and have been pretty content to continue to work with it. So we'll see where this one goes. I don't think it's probably moved enough from the stock's current price to really make the idea of a roll extremely practical. Hello, Jay. Good morning. So glad you're here. Let's see. Let's go out to the 16th. There we go. And again, I brought in 40 cents on this, and asking price is 35 cents. So not really worth trying to worry too much right now about rolling it. It's certainly not rallied enough to make that practical. But lots of open interest. That's a good thing. And time is working for us. I went out a month on this, and that means that every week, we'll check back and see how it's doing for the next couple of weeks. But time is working for us on this one. This trading range that we're starting to see, and I'm a little premature in calling this a consolidation range, but here's Here's resistance, like I said earlier. Here's pretty strong support at the 200-day moving average. It would be not surprising at all to see this settle into a consolidation range somewhere between these two prices. And like I said, if that does, that'll work out really nicely for the things that we want to do. So the longer that it just kind of drifts and moves sideways, the better off the contract that I'm in is. We'll just let time decay, do its thing, erode a little bit one day at a time, and go from there. If anybody else is in CTRA on this, you want to share your numbers as always, please feel free to. But that's pretty much where this trade is. The only other one is on target. The only other trade that we have on deck, literally, we're just burning through them here in 20 minutes. Was a trade on target, which I sold the $92 strike price on this one, and this is quite a bit. This was a bit above the price that I used last time on this at the beginning of December when I was able to sell the $89 strike price. So it it had rallied quite a bit until the end of last week, was up around 98. It had pulled back just a little bit, and implied volatility on this was high enough that I was able to go a little bit conservative with my $92 strike price, but I am out to the 16th of January on this as well. So let's check in on this one. Again, I don't expect there to be enough distance relative to the $1.55 that I brought in on this to make a rolling option really very practical. But let's take a look at it and see where things stand. With 3 weeks left, let's expand our contracts. All right, Barry, you beat me on CTRA, which is awesome. Brought in 50 cents, expiring the same time, $25 strike price. So good job. I like it when you do better than I did. That is very, very nice. And on this one, I brought in $1.55, and the stock has moved far enough, being at 98, that there's a material change here with the at 92. The asking price is 89 now. It's not quite enough yet to really take a rolling opportunity seriously in my book. And most of the people that I know who do enjoy rolling a lot will usually recommend waiting for at least a 50% difference between the strike price that between the premium you brought in on the put sell versus the current price. So Barry beat me twice. You beat me on CTRA and on target, so that's awesome. That's a great job. $1.88 with the same strike price. I tried to get my trade in as early on in the day as I could, and looks like you did better by being maybe a little bit more patient than I was. And that's a good thing. Lots of activity on this, so that's a good thing. But in fact, the asking price just while I've been talking has gone up just a little bit to 93 cents. So I'm going to go ahead and again, the method here is, if you want to be an active roller, look for about a 50% difference. So if I'm you're right about there, Barry. So that might be worth it. Don't know your numbers. Out for a walk right now. That's good, Jay. I hope the weather's nice and it's a good time to be outside. We had a very, very, very temperate Christmas here in Utah. It's been a little bit bizarre, but my wife really enjoys it. Yeah, you're letting them ride out, and I think that's the smart thing. Um, but again, if you do see a 50% difference between what you brought in on the premium when you made the put sale versus what is there now, sometimes it's worth considering. And if that's the case, then this is where the opportunity to increase the compounding effect by increasing trading frequency becomes useful. And if you feel like that's not, then that's okay. For me, it's not. There's not enough of a difference here to make that a practical consideration, but it is starting to move in that direction. There's already, 29-cent difference here in the price just in the couple of minutes of the trading session so far today. So who knows? Um, there's been a fair amount of movement. Okay, those are all of the trades that I have that I'm keeping track of right now. Obviously, we'll have another trade coming up next week. Barry wouldn't mind being assigned target at 92 and just holding it for a while, see if it gets back to where it was. And that's, talk about legacy holdings and being willing to accept assignments on these stocks. That's a great comment, Barry. I really appreciate that. This is a stock that has been in this protracted downward trend for more than a year. Look at this. This is from, good heavens. This is a stock that has been dropping for the better part of 5 years. All the way to the very, very early part of 2021. Well, maybe not early, but August of 2021. So 4.5 years nearly. This is a very long and very protracted downward trend. And the value proposition is maybe not all the way back to those peaks, but it is still very, very much above 92 or even the 98.70 something that the stock is at now. This continues to look, this little pattern here continues to look more and more like a really nice beginning of a downward trend reversal. Think about this. Remember, trends are often defined by stair steps, right? Higher highs, higher lows. When we're talking about an upward trend, here's the bottom of the downward trend, the latest one. Here was its last peak. So low, low, high. Right now, this high at around 100 is marking resistance. Barry, thanks for the comment on Nike. We'll take a look at that in just a minute. But here's resistance right at 100. We have higher lows, and possibly if we can get the break above 100, and considering the way that momentum is moving and building in the last couple of days here, it's a possibility. Then we've got, I don't know where the next high is going to be, but it could possibly be up here around 105. And if so, then we have higher lows and higher highs. These are the beginnings of an upward trend. This would be a very short-term upward trend, but you got to start somewhere when you talk about trying to see a sea change in a stock's long-term downward trend. So we'll see. All right, so Barry and Gib, I'll get to your comment on Intel as well. Let's go ahead and take a look at Nike. So this one announced its earnings on the 18th of December, so this was last Thursday. I haven't redone any of my analysis on Nike since then. Still been waiting to make sure that all the data is coming through to my data feeds. But it gapped lower following ahead of that earnings announcement and has rallied just a little bit. That is really interesting to me. This may mark an interesting new bargain price, possibly for Nike. Um, I don't have a position in it right now, but this is one just talking about long-term trend reversals, right? Nike has been in the midst of its own long-term downward trend that honestly looked like it might be building into a new upward trend right here, only to drop back out of it and re-extend, see the downward trend's strength reassert itself. Sometimes that happens. So when I say that Target could be starting into the early stages of a downward trend reversal, let's keep in mind that we are very, very early in that, so it's certainly not a guarantee. Um, but Barry sold a put on Nike for 57. So you're a little bit below this one at 57. So that's a very conservative trade, especially considering the way that the stock has been rallying since then. And that also expires on the 16th of January. So that's a nice trade. And that's taken on your own, which is awesome. I like that. Need to be assigned down to 57 and see the Michael Jordan effect take place. Yeah, we'll see. We'll see. I do think, just based on what I've been seeing in the last several quarters for Nike, I just don't think that the valuations down here are justified. Again, I have to redo the analysis from this last quarter. I'll be surprised if I see a whole lot different. So I think that a lot of these downward trends in a lot of these stocks, like Target, like Nike, some of these bellwethers are really, really overstated and overblown. And they're a little bit confusing when you see, let's again, not to preach too much on Target, but for comparison, here's Walmart not seeing nearly the same kind of downward trend. So Walmart's been going up, Target's going down. Why? Target's not struggling that much. All right. Gib asked about Intel. Any thoughts on Intel? Wait and see. Barry, I've only been trading since 2021. Missed a lot of the exciting trends of which we may never see again. Never say never, my friend. Um, Market just is always evolving and always shifting. So those trends are always there to be seen. It's just a matter of waiting for them to come around. Um, Gib, I think that Intel has still a long way to go. Um, a lot of this, a lot of this momentum that we've seen since August comes on the back of Nvidia, and that's simply because Nvidia has made a major investment in some of the new operations, including foundry operations that Intel has been building. So the roles have been reversed, where maybe as recently as 5 years ago, Intel would have been investing in Nvidia. Nvidia is now investing in Intel. So there's an interesting reversal there. I don't think that's necessarily a bad thing, but I do think that it means that this is one that is Intel is still very, very much in the midst of trying to transform its business and trying to reclaim. Uh, I'm not going to say former glory, but trying to reclaim reclaim its some of its strengths as a leader in the semiconductor industry. It's lost some market share. It's given up some of that leadership, and that means that it's going through a little bit of its own maybe existential crisis. I don't know. Um, I do think it's going to come back. Intel's been around too long and gone through too many markets like this, and experienced periods like this before, where there were other companies that seemed to be in position to take away from its business, and it's found a way to survive. So I'm not really sure that I'm willing to bet against it, but it does have a long road to get back to where it was. Barry says, okay, yeah, Jay, huge investment in Israel for NVIDIA. That's interesting. Gib, you're like me. You got to sign at 52. I'm in it around 55. I'm not willing to give it up. And that's not just an emotional thing. It's just a belief that Intel is, they've been around too long. They've been around the block too many times to just simply suddenly lose the ability to compete. But it does mean that they've got a road to hoe. So Barry says you're not much of a risk taker. So if I'd gotten into Amazon when it was trading lower, I probably would not have when it hit 4,000. So Amazon. Yeah, this is one. I'm not saying anything bad about Amazon. I mean, look at their trends since 2023. Kind of speaks for itself. I haven't gone through any detailed analysis of their value proposition, just because hey, they don't pay a dividend. That means that they don't qualify for what I do with Rebel Income. I'm focused very exclusively on dividend paying stocks. Amazon's a good company. Okay, I've been a Prime member for very, very, very long time. And so, speaking as a customer, consumer, got nothing bad to say about Amazon. But until they start paying a dividend, they're not going to get my attention for my trading system. So beyond that, that's about all I have to say on Amazon. All right. Let's see. We've got about a half hour to go. If you would like, one of the things that we could do, we haven't done this in a little while, is I could walk through the analysis that I do for the stocks that I use for my trades and that you see me publish reports on. If there is a stock that you would like to go through that with, we can go ahead and do that. That would be something that would be useful, and I think would be a good use of our time, just to kind of demonstrate exactly, what's happening behind the curtain. I try to make as much information available in my reports and in my trading alerts as I can, so you get a good idea of what's going on. But it's one thing to read the report, and another one to compile it. So, yeah. Had a friend who got into Amazon trading around 700 and did very well, bought a house with it. Again, no criticisms, right? No criticisms on Amazon. Just doesn't pay a dividend. You're going to see me pass on a lot of high growth stocks, not because I don't like the companies, but just they don't pay a dividend. So it's an automatic disqualifier. Gib would like to see the analysis. That's fine. Let's give me a stock that should be interested in doing that on. I am going to ask that it is a stock that, again, would fit our normal trades. So, let's try to identify a dividend paying stock that maybe you're following that I have not been. I always like to see my investing universe expand a little bit. And sometimes if you clue me into to something that I may not be paying attention to, that's a good thing. Let's see. There's one I haven't looked at in a little while. Valero. Interesting. Let's see. Okay. We have been talking about Nike. Let me see how current our information is on Nike. So here's the big gap right now. Here's the reason that completing an analysis on Nike is really hard. Is if everything had filtered through as it should, and here's the latest earnings report, 11/30/2025. Everything is filtered through, then this line would be extending all the way to the end of the chart, which it's not. So Micron. This one might be in the same boat as Nike, to be honest, Gib. Nope, it's not. Okay, let's do Micron, and we'll probably have time to do Oxy as well. So first of all, technically speaking, we have Micron here. That has really accelerated in its momentum. I expect, but I'm making an assumption here, that this means the value proposition is probably oversold, but I could be wrong. And so let's go ahead and get into it and see what we can find. So I'm going to need to move things around a little bit. Current price, 286.12. Book value 52.25. Okay. Now, recently, one of the data sources that I was using for my valuation analysis changed their business model. I used to use a site called Macro Trends to try to identify historical valuation levels. They changed their model. Instead of making the information available for free as they were doing it, they wanted me to pay for a relative. They wanted me to go on a paid plan, and I don't want to. So I'm using now, for the valuation side of things, the Morningstar website. It means that instead of going quarter by quarter, I'm still getting 10 years worth of analysis. It's just on a yearly basis. So yearly averages as opposed to quarter by quarter. That shortens the data I have to gather a little bit, which is nice. But if you've seen me do this before, you're going to notice that it flows a little bit differently. I had built this spreadsheet originally for quarters instead of years. So this is going to be, you're going to see half as much data in each of these in each of these rows is what we usually have. But let's go off of price to cash flow is 14.79. There we go. And we'll just plug in each of the past several years. So price to book 220, 1.11, 2.27, 2.14, 1.63. Okay. So here's my average. Oops. And you see that comes right down to the last year that I was able to define. This is pretty low average compared to the stock's current price. So just on this basis, it's putting the target price at 91.75. That's only based on the price to book. So let's see what happens when we plug in our numbers for price to cash flow. That's part of the reason I said earlier that I kind of doubt that it's going to come in as being undervalued right now. So let's see, 7.26. 7.23. And 3.16. Okay. So the cash price to cash flow puts it down at $148. That means combined, we've got a fair value target here for this stock of about $120 per share. With it around $286, that means that we are significantly overvalued. By more than 58%. Now, that's again not saying that this is a bad company. It's just saying that the valuation metrics aren't working out the way that I want. This is why I'll pass on. You'll see me usually not even touch stocks once they start into these kinds of bullish parabolic trends. But that doesn't mean that it's a bad company by any stretch. And if we dive into those details, let's take a look at free cash flow. Contrast that against market cap. All right. And again, I'm going to need to compress this a bit. Here we go. $322,661 is the market cap, and scroll down to get to free cash flow. Has been improving impressively here, and this is a very, very good thing. Just means the stock's price has accelerated so far that the improvement in free cash flow is not being reflected in the valuation in the same way. There's a disconnect between the rate of increase in the price of the stock versus the rate of change in free cash flow. 10,318, 10, 7, 1, 8, 2, 1, 5. Cash has improved nicely also over the past year. So again, we're looking. There's a reason that Micron stock has rallied as far as it has, and a lot of it is on the back of these strengths. Lots of liquidity, improving free cash flow. Let's see how they're doing for long-term debt. Long-term debt has been dropping. And that's a positive pattern, right? From 15 all the way down to a little over 11. So they've retired almost $4 billion in long-term debt, and they have nearly as much capital as they do long-term debt. So this is close to a fortress level balance sheet. The last bit of measurements I want to do is net income versus revenue. When I divide net income into revenue, I get a percentage that I use to consider a company's overall profitability. This is different than free cash flow, a little bit different than earnings, but literally speaking, net income is just revenue minus expenditures. And so what I want to see is not only what the level is, but I want to compare the last quarter to the last 12 months and try to see an improvement in comparison. So 11,909 versus 4,2,312. And so what we have here get my drawing tool back. From 28.15% on a trailing 12-month basis, this increased to 38.41% over the last 3 months. So increasing free cash flow, improving liquidity, manageable debt, and declining debt, by the way, along with improving net profitability metrics, means that Micron's doing pretty well. Their business is doing pretty well, and that's a big reason that the stock has been rallying as far as it has. The market is taking a parabolic, and the stock's increase in price is outpacing all of these improvements. That's not unusual, especially not in the tech world, but it does mean that it makes it a little bit hard to justify as a value opportunity. So if you are going to be working with Micron on the basis of those strengths, you're really just working on the growth side because there's no value. There's really no value opportunity to be spoken of. This is a company that cut their dividend during the pandemic, reinstated it, and has kept it mostly level for most of the last couple of years at 46 cents per share. So it's kind of a minimal dividend. You're not buying Micron for the dividend, but the fact that they did reinstitute a dividend is a positive thing. Good company, again, just doesn't have the valuation that I want. So, all right. Let's take a look at Occidental. Same problem here, unfortunately. We don't have the latest. Now, let me see. Yeah, we do. Okay. Yeah, none of this. So here's, well, let's see. Let's go to Oxy. Okay. So their next earnings report isn't due until the end of February. And this is another stock that's way down in a very relatively depressed state. Well, it tells you how long it's been since I looked at them. 2022. So they're definitely in a long-term downward trend. Let's see what that means for the rest of it. $39.87, $28.93 is their book value. All right. Barry, you may have given me a stock to pay attention to. We'll see how this works out. They're on my watch list, just not one that I have looked at in a little bit. Okay. Barry has a $40 put selling trade on it. Okay. Brought in 85 cents, expiring next week. So you're just a little bit off from that price, right? That's not terrible. Okay. So 1.76, 2.5, 3.02. There we go. So the price to book is translating to a target price at around 64.50. That's interesting. Let's see what we get from our cash flow, which is 3.34 right now. $4.25, 4.37, 66. $18.65. Okay, so that puts it for the price to free cash flow ratio. The target is 94.23. When we combine the two of them together, we get a overall fair value target around $79, a little bit above that. So almost double the stock's current price. That's interesting, to be sure. Now let's see if our other numbers back it up. Considering the length of the downward trend, I will say that that discount is not extremely surprising. It is encouraging, just not surprising. Okay. 39377.6 is the market cap. Free cash flow has declined over the past three quarters, but is about level with where it was a year ago. This is actually not a pattern that is all that unusual in the energy sector right now. Ideally, we do want to see improvement throughout the entire year, but context is everything, as always. And the fact that this has been mostly stable in a very uncertain period of time relative to things like tariffs, interest rates, whatnot, um, is still probably a net positive thing. So I wouldn't take the decline over the last 3 months as a categorically bad indicator. All right, 2159, 2326. We're seeing a similar pattern here with cash, right? A modest decline, a little bit more modest decline over the last 3 quarters in cash from 2.6 billion to 2.15 billion. But this is also a little bit above the level of a year ago. So repeating the same pattern from free cash flow. Again, probably overall a net positive. A lot of that depends on how much long-term debt they're carrying. Okay, long-term debt has been coming down. They are pretty highly leveraged. But they've also paid down a little over $4 billion in the last year, going from a little under $25 billion in long-term debt down to a little under 21. So long-term debt has improved. Cash has remained relatively stable, as well as free cash flow. That also suggests certainly that servicing their debt is not a problem. Let's just double check net income and make sure we have that picture as well. Okay, 2097, 26853. All right. And then the last thing I want is their dividend. So they've been increasing their dividend in each of the last 4 years that we can see. Those increases have been moderated from year to year, but we did see an increase at the beginning of this year up to 96 cents. That's not huge, but it's useful. More importantly, again, this is an improvement. This is an improvement. Well, let me back up. This is clear growth. I'm going to take this as a net positive just in terms of stability. This is a net positive in terms of stability. This is a positive pattern. It's been going down, but that's also what we want. So overall, there's more positives than negatives going on here. Healthy profitability that has improved from 7.81% to 12.5%. So not bad. So Barry, thanks for putting Oxy back on my radar. I'm not saying that this is gonna be coming up in my next trade, but it might. It's certainly a candidate at this point. So we'll see where things land. But certainly, this is a very interesting stock that is trading at a significant discount. If it can hold at this support roughly around 39, which it appears to be doing, then we may see this downward trend begin to moderate some more. Who knows? Right now, it's still very much in effect. So, Barry, it's historically been a big part of Buffett's portfolio. Yeah, not surprising. Not surprising. Occidental is one of the larger companies in the energy industry. So, all right. Well, I hope that was useful. It certainly was for me, as I mentioned. But I really appreciate everybody's time and your participation today. Again, I hope that you've had an enjoyable holiday so far. Uh, you're welcome, Barry. Thank you for offering these up to go over. Um, I hope you have a great week as well and enjoy the new year coming up. Um, if there are questions between now and next week, as always, please don't hesitate to let me know. Rebelincomesystem@gmail.com is my email address. You can also reach out to me on Substack or on Discord, whichever platform you prefer. Otherwise, we will talk again next week. Thanks, everybody. Enjoy the weekend.